tell, welcome to part 5 of Price Action Traders Mindset. In this video, what we're going to do is we're going to go over creating a belief system. Now, I've gone over psychology. I've gone over looking at evidence in part 1. I've gone over eyeing off trends. Right? I've gone over strategies. Right? How to use your stop. How to places take profit. How to do break-evens. Lastly, what we need to go over is creating that belief system, because no matter how many ways like eyeing off trends, how many times you get taught a strategy, how much you make from that strategy depends on how you apply yourself and how you actually believe in that strategy. Let me ask you, let me just go over one common mistake a lot of traders do. They'll be testing out a new strategy and a successful strategy. Let's just look at a really successful strategy. And I'm going to go over a strategy in a minute with you guys. They're just a very, very simple strategy, and I'm just going to show you how a simple strategy can make money, right? And how you too can adapt a belief system with your own strategy, whatever it is, okay? You need to do back testing, right? Back testing is the key component that's going to take you from average trader to successful trader. The back testing teaches us one major thing that's really, really important. It teaches us how to deal with losses during the process of making money. And this is the common thing that a lot of traders fall into the trap of. They'll get 5 or 6 winners in a row and they'll be like, wow, this is the best strategy ever, and then they'll get 2 losses. Now what they do is they focus on those 2 losses like there's something wrong with the strategy. There's nothing wrong with the strategy. Losers are part of every successful strategy. Okay, losing trades. Right? And like I said, sometimes we'll have down weeks. And you're going to have phenomenal up weeks as well. If you follow the process, a process that works, generally most successful processes are based on price action or based on structure. 2 subjects that I've gone over in extensive detail. Now, if you haven't watched my part 3 where I've go over eyeing off trends and looking at structure, and you're wondering what I mean by structure, well, go back, watch that video, guys. Because structure is literally one of the most important aspects of trading. You need to understand structure. Doesn't matter, what strategy you're using. Structure needs to in some way align with it in order to be exceedingly profitable and not to get too many losses. In this video though, I'm going to go over something a little bit different. I'm going to actually show you some demonstration of some simple, basic price action. Now, I went over this in the past in a video basically called the daily alert candle. And a lot of people that I showed that to were really impressed because it's such a simple strategy. And what it was basically when the market is moving, I'm on the weekly chart here. Let me just move to the daily. Right, this is the Euro US, one of the most traded currency pairs on the planet. Actually, it's one of the most traded products on the planet. Assets, whatever you want to call it. Okay, currency. Okay, so what I meant is this. Usually after you get a bearish candle, any type of bearish candle, after a bullish candle, the market usually goes down after that. And usually after you get a bullish candle in the market usually goes up. Sounds too simple, right? We as traders always like to trade, and we always like to see trading as the most complex thing on the planet, do we not? We always like to just put ourselves in this category of, what we do is so special. It's so hard to do, right? And that is actually a negative. Trading does not have to be difficult. It can be really simple. If you are really good at following a process, I mean a process of, say, win, 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 loss, loss, win, 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 loss, 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 win, 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 etc., etc. The process continues. If you're good at that, you can make a ridiculous amount of money in this business. And we all try to get better at that. I get it, guys. I get it. We all go through it. You know, we all make mistakes. I still make mistakes to this day. And you know what? When I do make mistakes, that's usually when I lose money. It's usually never the market's fault. Pretty much I can lead back to every single mistake I've made in trading, and I can say that times where I've lost money, it's because I went through the process of believing the market was going to do something based on what I believed in my mind rather than what the chart was saying. The chart is always telling a story. And so I'm going to go over a couple of programs to recommend for you guys to do back testing, right? And I'll include those links below this video. So these products, they do not cost much. You know, if you're serious about back testing, you have 3 options. You can do it the free way, which works quite fine. It's fine. You have to do a lot of paperwork. You have to work. It's not going to be exactly like real trading, right? And the free way is you pull the charts back and you press the F12 key, right? And I'll give you an example of that. All right, so you take off auto scroll, right? And say you're looking for some price action testing. So, okay, I want to test in bearish engulfings, or I want to test bullish engulfings. So the market's moving up here, waiting for the first bearish engulfing, and bam. Right? So you can't see ahead. Now, we did see ahead just a second ago, but that's not the point. What I mean is, you pull the chart back, you don't look what's going on, then you do your testing. Right? You don't see what's going on before you do your testing, right? So, right, and then that way you can test with the F12 key. Now, anyone can do that, right? It works great. Okay, it does work great. But if you want it to be more like real, as you can see, we sold off quite nicely. Boom, 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 boom. And where was it telling us to get out? This might have been okay, here is where we'd get out. And why would we get out there? We'd buy here, around this level. And then bam, we got stopped down on that one. And buy here, we would have been break evened here. And there we go, there's a buy there. All right, so I'm just showing you, like, if you're testing out engulfings or whatever the strategy is. And I'm going to show you, I'm going to go back to the basics. I'm going to show you a simple strategy. It's called the daily alert candle strategy. Now, I showed this in a video a long, long time ago. And I just want to show you that by understanding a belief system, right, following a simple process, you can make money. Right. Now, like I said, I'm going to add the links below of all these different testers that you can use that actually make it look like real live trading. Let me go through it. So you have the one where you can pull the chart back, which is what I just went over. There's another program called Forex Tester, Simple Forex Tester, and it's for MT4. Yeah, and you know, it's a very cheap program, very easy, and it allows you to open up trades in multiple directions. It's quite nice, works quite well. It's not 100% perfect, but it does work good, and it feels like live trading. And you can use that on MT4, which is the benefit of it. You do want to get an MT4 platform that you can get a lot of history data on, though. As an example, I'm getting up to or over 2 years on the 1 hour. I'm getting up to about nearly 4 years on the 4 hour, and I'm getting nearly 10 years on the daily, and etc., etc. Right, and different brokers can give you different amounts of history. Just be aware of that. Then there's another program which is really, really awesome as well, and it's called Forex Tester 2. Right now, it's its own program, and a lot of professional traders use it as well. Now you can check out both those links. I'm going to leave them below the video to check them out. And the importance of these programs, like, or pulling the chart back and testing out your strategy, is, so you have a free option and 2 paid options, right? The importance of this is it builds your belief system of, does my strategy work? You don't have to put money down. Finally test it out. Just test it out. There's nothing better and nothing more satisfying. People might go, oh, that strategy doesn't work. But have they tested it? Wait a second, I tested it and had it worked 70% of the time. Here's my results. You can't argue with backtesting, especially if you've done more than 4 or 5 years of it. You can't argue with the results of backtesting. Markets don't change that much. As for my core strategy, which is, I like to use, which I'm going to show you, like the alert candle, the engulfing candle, buying and selling off structure. They're all connected, right? They all work alongside each other. And, I've done, over 10 years testing on over 35 different pairs. Do you think I feel confident and know whether that strategy works or not? Of course it works. I did my due diligence. I did my testing. I did long hours of testing. I did weeks and weeks and weeks and weeks and weeks of testing. So you don't have to take my word for it. What works for me might be different for you. You don't have to take my word for it. Do your own testing. I know what works for me. I know what works. I know when I see a certain type of candle or a certain type of structure point, the market's going to go up most of the time, or at a certain structure point, the market's going to go down at a certain place. It most likely is going to happen because I've done a lot of back testing. I've built my belief system, right? If you don't build your belief system properly, you're going to always have that little voice in the back of your head telling you, does this strategy really, really work? And when you get a couple of losses, you're going to be hit hard and you're going to be like, oh, I've got to try a different strategy. This strategy's not working. Look, guys, I've shared with you guys 3 core strategies that I use regularly, right? And I mean, there's different elements of those strategies, but they're 3 core strategies that I've used, and they all work quite well. One was called the daily alert candle strategy. One was another called a weekly pullback strategy. Another one was an engulfing strategy, and another was this is actually 4. Sorry, guys, and a structure strategy. Okay, and they all have different varying points of success, but they're all successful because I've done my back testing with it. However, I don't want you guys to go out there and just start trading these type of strategies that I'm sharing with you. I don't want you guys to do that. I would much rather you guys actually just sat down, purchase one of these programs for back testing, or do the F12. It doesn't matter. I don't mind, right? I'd much rather you guys sit down and actually sit down and sit there for weeks and do your back testing. You've got to realize that if you unlock the key to your belief system, you are unlocking the key to wealth. You're not unlocking the key to something that might work. Don't give up, guys. I get way too many emails from people that say, "Oh, look, I'm about to give up in Forex. What can I do? Should I test out should I do your strategy and see if it works?" And I say the same thing commonly over and over and over again. Yeah, my strategy is successful. They seem surprised when someone says, "Yeah, does your strategy really work?" And so, yeah, of course it does. Works for me. But that doesn't mean it's going to work for you. And the reason it doesn't work for other people is because they don't believe it. You need to create your own belief system. And you need to use a strategy that suits you. You can buy blindly off structure and make money. Yeah. And you can sell blindly off bearish structure on pullbacks and make money. And I showed you that in video number 3 of Price Action Traders Mindset. Just showing you how structure works. All right? And that's without price action. That's just simply understanding how the market works, and when you're wrong, you take a loss. It's as simple as that, following the trend. I've also shown you guys that you can buy after a nice bullish engulfing candle, and most of the time it will work. Yeah? Sometimes it doesn't. In fact, sometimes the success ratio during certain markets feels like it's around 55%. It sucks when it's like that. But the majority of the time, it has a success ratio of over 70%. So, what's that say? It works. You don't want to fix something that works. You can't improve on something that works. It either works or it doesn't work. It's either profitable or it's not profitable. And your belief system teaches you whether something's profitable. So anyway, the 2 programs I recommend for backtesting are Simple Forex Tester, which I'll leave a link for below this video, and Forex Tester 2. They're both very cheap, very affordable programs. Look, guys, it's up to you whether you guys want to use it. But I highly recommend these programs. Yeah. And in future, I'm going to do some videos with testing those programs as well. Okay. And showing you guys how you can use them well. You know, if you guys want that, you know, just let me know. You know what I'm saying? So, and like I said, it's up to you guys if you want to use those programs. You can pull the chart prat and press the F12. Either way works. All right? And that's a free way of doing it. You know, the reason I recommend programs like Forex Tester and Simple Forex Tester is because you are entering trades like the real market. You can't see ahead. Yeah. And so it feels like real trading. To some people, it has to feel like real trading. Yeah. Anyway, so let's get on with this video. I'm just going to show you understanding creating a belief system. I'm just going to use my simple strategy that I shared with you guys probably about a year ago. Okay. And I got a really good response from it. I called it the daily alert candle strategy. Now this is so simple. Now, if you're wondering if a bearish engulfing is an alert candle after a lot of bullish engulfing candles, yes, it is. It's a type of alert candle. All right. Now, I'm going to give you an example, all right, with these arrows of what the alert candle is. You had a movement down here on the daily chart, then you got a bullish candle. It doesn't matter what type of bullish candle it is, the market tends to go up after the sequence of candles. Now, it's not going to do it every time. Look at this. So, let's have a look here. It's very simple. You sell about 8 to 9 pips below in the direction of the alert candle. You buy in the direction of the alert candle if it's a bullish candle, about 8 or 9 pips. 9 pips seems to be a really magical number, right? Okay, where do you place your stop? Well, when you have a low nearby like this, you can place your stop just below the low on this one. Where do you place your stop on this one? There is no higher candle, so you just place it exactly above the candle. Now, how often does this strategy work? You're probably thinking to yourself, well, do your back testing. You'd be surprised. You'd be surprised that this actually works. 7 trades in 10, basically. It's got a 70% success ratio. It's highly profitable, and it's probably the most simple logic of trading. Now let's have a look at this. Now, you're probably thinking to yourself, oh yeah, but some of them don't work. How do I manage the ones that don't work? Well, just bear with me for a second, guys. Let me just show you some of the last 10 trades with this strategy. And look, I'm going to take every trade that I see with the alert candle strategy, right? Now, by doing this, yeah, I might do it over 10 trades and go, yeah, it works in the first 10 trades I do it. I don't do it on 10 trades. If you want to build your belief system around your strategy, 1,000. Do it over 1,000 trades. I can't do a video on that, guys. I can't. It would just go for way too long. And as you can see, that was an entry. This would have been a sell entry here. That's the stop, this candle here. And your entry would have been here. But I'm going to show you 10 trades here with this strategy, right? And I'm not picking special trades or anything else. You're going to see some losers here. Okay, so you got one here, right? Boom, and the market went down. How far did it go down? Let's have a look at this. 60 pips. Now, with this strategy, there's some simple rules. You lock in at break even around 35 to 40 pips, right? After that, you know, if the market starts to come back on you, let's say it goes to 60 pips on this one, you can get out a little bit early, like around 10, 15 pips, whatever. It doesn't really matter if you get break evens. All right. Now let's go through, because we're looking to capture trends with this move. So what I usually do if I'm trading this strategy, like with the back tester or whatever program I'm using, or if I'm doing it in real life, I usually just take profit based off what the market is doing. If it's pulling back quickly, it's coming back to my stop, I might just take 10 pips from the market during that process. I might just let it hit my break even. And I do that a lot because I'm not going to sit here looking at the charts, guys. And this is the beautiful thing. This is a daily alert candle. So these are daily candles. Yeah. So let's have a look at this. We had this move down here. I'll just do this section. So we had move up, then we had a bearish candle. Right. So let's do this move up first off. As you can see, that move up worked. Price went up. Okay. Nicely. Right. Stop goes below the candle. If it's ooh. Okay. You get my point. Stop goes below the candle. Your entry is 9 pips above. Ooh. Okay, sometimes these lines are hard to align, hey guys? There's no real bias for trend here. This is basically pure price action at its core. Now you've got this sell candle here. Now you enter 9 pips below. So did you have an entry here? No, you didn't. The market didn't go down 9 pips after this bearish candle. Now let's have a look at this. From this entry here, this bullish candle, we had this downward move, got this 1 day of bullishness, boom, went up 62 pips. So this would have either been a break even or you would have gotten a couple of pips on it. Okay. Now the point of why does this work? Probably a lot of people ask me this question, why does the daily alert candle strategy work? Well, it's really simple logic, really. After a day of the bulls taking control or a day of the bears taking control, the market tends to keep going in that direction. It's as simple as that, guys, and you don't have to overthink it. This strategy just works because if you look at the chart, it works. And if you want to do your back testing, you'll find that only in range periods does it take you out multiple times. And if you're using a break-even function, which I like to use, yes, I get a lot more break-evens because I use it. But if you are using it, then that stops it during those ranging periods. Now, as you can see, this buy here, so far we've had multiple opportunities. This one was not an opportunity because it did not break lower, because we're entering after it. We needed to break the low of the daily candle. As you can see, low, above, above, below. You see what I'm saying? Okay, so this one here is an example. Market kept going up, kept going up, kept going up. And see, what do we do when it keeps going up like this? Right? I've shown you guys this before. Okay, so this candle closed, right? This candle closed, then this candle closed. When we get a close up here, what do? We place our stop below the previous daily candle. We keep pulling it up. This is better than a trailing stop, guys. So when we had this candle here, where do we place our stop? Here. Right? And then you got this bearish candle, which could have told you to get out of your trade, right? Okay. And then also all of a sudden you got another bullish candle. So where would you place your stop? Just here. And then we got a close here. Just here. And if you'd taken this as a bearish candle, and just gotten out of this position, you would have taken a small loss. See, if you took that as an alert candle, that's up to you. But I don't take alert candles when I'm in a trade. But if you did, that would have been a tiny loss, and it would have been a loss of. Just make sure that did go down 8 pips. No, it didn't even go down. No, it didn't even go down 9 pips. So that wouldn't have been a loss. It didn't go down far enough. Okay, so that wouldn't have been an entry. It looks like, because this is the Euro US, okay, so I assume that was 9 pips. It's not. But this is an example of how to enter these trades, all right? So these would have been a little tiny bit higher, okay? So you keep pulling your stop up, all right? Okay, until eventually your stop is below here, and eventually you get a bearish candle. Now this bearish candle tells you to start going short, right? Right, so this one here, right? So we got a nice bit of pips, right? So we decided to get out here, which would have been, from this one trade with the alert candle strategy, 240 pips, around 240 pips. Nice, yeah? Now you would have entered a sell here, so this is a bad trade, a losing trade, right? Because yes, it went in our favor 12 pips down from the bottom. Okay, so we would have been entered the trade around here. Now, if you want to do different back testing of where you should enter after the market, I like to use between 5 and 9 pips after the market. It's an average. It depends on the pair. The 9 pips that I got, probably a lot of people are asking me why, or they're thinking, why did I get 9 pips after the market? Like, say a market body closes and I do 9 pips, I enter 9 pips later, because it seems like the earlier you enter, the more reward you have. Well, 9 pips was a value I attained by looking at over pairs like the Euro AD, the GBP AUD, the GBP New Zealand. With the Euro US, however, because it's less volatile, you could use less. You could use like a pair like 5 pips or whatever, but do your own back testing. Okay, between 5 and 9 pips probably would be fine with this pair. The importance is of it breaking the low of the daily low or breaking the daily high. The importance of it is that is a structure point on the market, yeah? So that the market held above, right, on that candle. So when it finally, so there you go, you took a little loss here. We had this big gain here, took a little loss of, let's have a look at that, about 80 pips. So we had 1, 2, 3, 4, 5, and then 6 we took a little loss, okay? And so this is a buy situation, right here. Buy just above, and the market went up, let's have a look, 65 pips. So we would have been either break even, or we maybe got like 10, 15 pips out of that. Then we got a bearish candle here. Daily alert candle, guys. Okay, so your stop's above, got a bearish candle here. The market did go down over 40 pips, went all the way down here to about 47 pips, and then the market went back up, did one little final retrace. So if you hadn't used the break-even function here, you would have taken a small loss on this trade. And not much, because if you look here, it was just from the break of this body, 58 pips. Right? And then when you got break-even on this, people often ask me, can I take the next bearish candle? Well, you're waiting for a line of bull candles and then bear candles. and then a bear candle. So no, you wouldn't take this trade. So this basically stuffed up your trade here, basically, in a way. So the next trade that you take is this one. Bull trade, right? And the market went up. So you're seeing straight away now, I think you're getting the point now. I've gone over like nearly 10 trades here. And as you can see, this works more times than not. Okay, that's your stop. That's, well, a little bit lower, but that's your rough entry there, just above the body. And it went up 61 pips. Okay, now up here, you could have sold again. And you can just keep doing this over and over again. Okay, you enter just after the body, right? Your stop goes above the candle. And basically the success ratio and the sentiment of these candles will keep you safe overall, right? And that went down about 37 pips after the body. I'll just make sure of that. Let me just test it from where it would have entered. 38 pips. So if you'd used it depends on how much you did break even. You could have taken a small loss on this one. This could have been a loss. Let's just mark that one as a loss. Right? Even though it went basically 40 pips in our favor. Okay? Alright. Now, you can use an indicator to lock in a break even. I do have a break even indicator. Let me know, guys, if you're interested in getting that. It's free. It doesn't cost anything. Okay, so here's an example. Here's a big candle, right? And as I mentioned when I showed you guys the alert candle strategy in the past, right? This simple strategy, I said if the candle is too big, the risk reward might not line up, and so sometimes you just stay out of those trades, and that's completely fine. But if you see, if you did take this trade, let's have a see how much we're risking. Would have been entering here, and you would have been risking 240 pips. The market did keep going up. Okay, just give you an example. Now this is a bearish candle right here. So here, boom, sold here. How far did the market go down? About 49 pips. So that was definitely a break even at least. Okay. Then we got, so these are the chopping markets that I'm talking about that can actually get losses. Now this is an interesting situation. This is the point of what I was trying to say before. When I said to you guys, if the previous low is close, right? And I mentioned that down here. If the previous low is close, you place your stop below the previous low. Right? And you'll see this as an example in the market a lot. So there are certain aspects that you just understand with the market that you just try to keep to. So we've got this bullish candle here. Boom. Yeah. Now, you can also, like I said, we got this bearish candle here and the market did go down. Would have been another break even there, and then the market went up again. What I'm trying to say is the market is constantly ebbing up and down, ebbing up and down. So let's have a look at this. We went up from here, 24 pips. And finally, it did come down, bit of a, almost looked like it was going to break us out. Our stop is 100, just over 130, just over 120. It's like about 130 pips on that. And see, we would have probably gotten out around here because of this alert candle here. Or if we hadn't gotten out this alert candle, we would have been locked in a break even around here, and the market still kept going up. Okay, so as you can see, the risk reward does not align all the time with this strategy. Okay, but because it works all the time. It works more than not. As you can see here, just looking from this back testing of these like 10 different trades, you see that it starts to, after a while, create a belief system of a strategy. And if you do this like nearly 1,000 times in a back tester, or 100 times in a back tester, or 100 times or more in a back tester, and you can see the profit adding up, after a while, it starts to create a belief system. And that's exactly what this video is about. It's exactly what you guys need as well as part of your toolkit to be successful in this business. Okay, so as an example, if we did get out here and we sold here, it would have been another break even right here, right? because that went over 40 pips. And then we got a bullish candle, so this would have been a buy right here. Stop goes below. Okay, there's no close low here. These are the sort of types that you can see that you've got close lows, close lows. Okay, so buy went up to here, right? We had this candle close, so where would we have had our stop by the time we're up here? We would have had our stop below the previous candle, which is right here, 65 pips. The market did go up 216 pips. So how you manage your money depends on how much you get here, all right? I'm showing the strategy. I'm showing a strategy that works. I'm showing you how you can lock in your break even along the way in order to try and get as much from that trend as possible. But as you can see, if the market pulled back and broke below the candle, that last candle, you would have only gotten about 70 to 80 pips on that trade, and to see if the market would keep going. But the market actually did go 200 pips. So just bear in mind, that, sometimes when the market goes over 150 pips or 200 pips in your favor, you might just want to take profits sometimes. Okay, you really want to let the market flow as much as possible, because when you get a nice trend, it really does pay off. So look, I'll do a couple of more, just showing you this strategy. And basically, like I said, I've gone over with you guys about the engulfing strategy. These are engulfing candles, right? But like I said, the alert candle is just basically another candle type, but and a bearish engulfing candle like this one. This is an alert candle, right? And it's a bearish engulfing, and it's at structure, right? Now, if I pulled that back on the weekly, you would see what I'm talking about. Okay, market moves down, keeps moving down. Where will we get out? Around here. We never know exactly how far the market's going to go. Get out here. What do we do when we get here? Right? We can't get out here because, we might have been break-evened actually, in fact. Yes, we were. And then we'd sell here. Right? Okay. Now, if we'd bought here, yeah, we would have taken, let's have a look. Yeah, we would have taken, if we bought here, we would have taken a small loss. So let's put that there. The reason we wouldn't have bought here is because we're already selling here, okay? And you've got to do that due diligence as well. But you know what? You can write down every single signal. Get the exact figures, right? It doesn't matter. What I'm showing you is in sequence. If you had this trade open and you were stopped and you were break-evened here, you wouldn't have been able to... oh, no, you would have been break-even here. Then you could have traded, yes, and it could have been a loss. And then you had a win. So take every signal, right? Boom. Build the belief system. I know these sort of trades hurt. That sucks. You got this sell here that went down to here. And you had this buy. It's a probability business, guys. Your stop is here. And the market went up 100 pips. Where would you gotten out? You could have gotten out here, 40 pips. Giving you the least amount of profit from that trade. You could have gotten out early in the piece. I mean, you could have even, if you were really good at it, you could have gotten out at 100 pips. But what I'm trying to say is you had the potential here to make at least 40 pips on this trade. Boom. All right. Then you got the sell candle and alert candle. Boom. Market went down. Doom, doom, doom. And it went down over 100 pips from your signal. Okay? And as you can see, this has about a 70 to 80% success ratio, if not more. Okay? It's very simple. Works most of the time. And as long as you use a good money management system, it makes money. As you go, here's your buy here. Yep, went over 47 pips. So what would have happened? You would have been break-evened. Yeah? Yeah, then we got a bearish candle after that. So what do? Sell here. Stop is here. Market went down. Went down a lot, in fact. here, 219 pips. Then we got a bullish candle, yeah, which possibly would have gotten out of our position, right? Taking a buy here, and was this a loss? Looks like it. Yep. And sometimes we just give a little bit back to the market. But as you can see, that loss is a lot less than our previous gain. And then we got another sell signal right here as the market's trending lower. And so how far did this one go down? Went down 85 pips. What was the minimum that we could have gone at if we were waiting for candle price action? Around 28 pips. We buy here. Well, 28 pips minimum, potential of 90 pips. Buy here. Does the market go up? Yes, it does. Went up 50 pips. Yeah? And this keeps repeating over and over and over again. And you will get periods where there's a couple of losses. And like I said, if the candles are too big and the risk is too much, don't take the trade. It's as simple as that. And that's just an example of building a belief system around a strategy. I just picked a very simple strategy that I showed you guys a long time ago based off basic price action and, without taking notice of other aspects like structure or, support and resistance or anything like that. I've just used sentiment alone to show you that sentiment alone can actually help improve an account. And so, yeah. Okay, well, that'll do for this video. I just wanted to show you that, like when you're looking at a good strategy that works, such as this, how you know it's going to work is by backtesting it. And you have to spend a lot of time. No one else is going to help you do that. You have to do that stuff yourself. Don't listen to, everyone else's advices, what works for me, works really well. But, every person has a different perspective of looking at the market. And if you want it to work for you as well, like it works for me, like a strategy works for me, do your backtesting. Create your belief of, yes, this works. Yes, I might only have 6 or 7 winners in a row and then I'll have 3 losers. But I accept that and I make money overall. Yes, I have down weeks sometimes, but overall I've done the backtesting over years and years and years and years and years, and overall it's profitable. Yeah? And find something that suits you. Some people prefer just trading structure. Some people prefer, but do your backtesting of it, guys. All right? I've done my backtesting of all the strategies I've shown you guys. And so you can believe it. Not just believe it because I'm someone like me is telling you to believe it, because, I know it works. I believe it. I don't need someone to sit here and tell me, I don't need someone to go to me, your strategy doesn't work. I don't care whether someone says my strategy doesn't work. If I've done backtesting of something, right, over, 10 years, and my figures show that it works 100%. I'm not arguing with over 10 years worth of data. And if someone wants to sit there and say, and if someone wants to argue and say, well, your strategy doesn't work, well, then they obviously haven't done their backtesting of that strategy. Yeah? And you might have a strategy where everyone's like, wow, this is the most successful strategy out here. This top trader's recommending it. It works so well. You might find that strategy doesn't work. Some way amazing, 1,000% gain over a year. Use this indicator. You're going to make money. It doesn't work that way. Trading is not that way. We've all seen these ridiculous claims by these traders that are just, they're more probably just trying to market their products. All right? Do your own backtesting. If you believe harmonics, pattern trading works, do your backtesting. I've done my backtesting of harmonics. It wasn't good for me. It didn't, I did backtesting of Gartley's and ciphers and, all sorts of different patterns. And I could not make a profit over the years. I could not, with backtesting, I could not make a profit. But to a pattern trader that's worked out some sort of special way of entering the market or something like that, maybe they have found a way of making profit. To me, patterns don't work. To me. But I'm not going to argue with someone that makes a living from patterns, pattern trading, because, you know, it might work for them. Maybe they're not willing to. What I'm trying to say is maybe the way I'm back testing it just is not the right way to back test it, or, you know, maybe they've got some special way of technique of entering the market. The point of what I'm trying to say is don't take other people's word for what works in the market. Do your due diligence. And, you know, I commonly have people saying to me, oh, why don't you just do live trades so that I can learn how to trade the market? Why don't you do live trades? Timon, can you please do live trades so I can understand how you trade the market? If you're the sort of person that's hurrying and he's like sitting there going, dude, do a trade, do a trade, just show me the money. It doesn't work that way. You're going down the wrong road. If you're the sort of person that's just like, dude, just show me the money. Show me what works and I'll trade that. Market, Forex, whatever you're trading. Yeah? Build your belief system. Seriously, guys, do your homework. Right? Don't just take some trader, even traders like myself, you know, like, yes, I'm a profitable trader, but, you know, do your own back testing, you know, so that, you know it's profitable. Not so you're just having some other guy telling you it's profitable. I know my strategy is profitable. I don't need someone to tell me it's not profitable because I know it is. And that's the difference between trader A and trader B. They could be both trading the same awesome strategy, such as what I just showed you. Do your back testing of this, guys. Just check it out. Daily alert candle. Something simple like this. One trader might be making money. The other trader might be losing money. One trader can't understand the aspect of process. Right? And that's really the glue that puts all this together, you know? Puts all your trading together. You know, understanding structure, understanding evidence, understanding where to put your stop, where to take your profit, where to put break even. This is like the blunt truth of trading, is that if you're looking at trading like it's difficult, like it's complex, right, then it's going to be more complex for you. It's going to be more difficult for you. There's a saying, you know, if you read the book Market Wizards, there's one saying that, you know, hit home for me, and that is, the market always gives you what you expect. Yeah, and at first, you know, it seemed like a philosophical thing. But no, not really. If you do your back testing, right, you know what you expect from the market. If your back testing shows that it's 73% success ratio, yeah, and it has a gain amount of around 15 to 20% per month with your strategy, then when you trade it on a live account, what makes it so you can't get to that gain amount? It's you that makes it so you can't get to that gain amount. There's nothing wrong with the strategy. You've done nearly 10 years worth of back testing, or 5 years worth of back testing. You've tested it on multiple pairs. So it's you, if the system's not working, if the stop loss gets hit and you can't deal with it, and it's you if, you know, you're being too greedy and you're taking too much from the market and you're not allowing your trade to run, and it's you if you are being too conservative, if you're being too willing to let your trade run and you keep getting break evens all the time. It's a balance. Sometimes your trade goes over 100 pips and you just take profit. right? Sometimes your trade goes to 50, 60 pips and it comes back and it hits your break even. You only make like 2 or 3 pips. Deal with it. It's not a big deal. You did not lose that trade. Many people that are getting into trading and they're getting into a really successful strategy and they're like, wow, I just can't deal with break evens. You can't deal with break evens? Well, pack your bag, because you have 2 choices. Deal with the break even or accept more losses. You have a wall and a decision to make what side of the table you're going to be on, right? And we can sit here like arguing with our system, our process, our profitable process, when really we're not arguing with anything. We're arguing with ourselves, guys. And we all do it. Yeah? I do it. I have down weeks and I just, I have, down weeks where I lose money on that week. All right? And it sucks. Yeah, I understand that, guys. It does suck. And then I have weeks where, wow, it's awesome. All right, guys. That's it for this video. Part 5, going over creating your belief system. Like I said, just to give it a big rundown of the to-do list for you guys. Do your back testing. If you want your back testing to be as like to real testing, purchase one of the programs which I've got listed in the links below this video, which is either Forex Tester 2, and you can click the link to go over there and buy them, or Simple Forex Tester. Or if you want to just keep it free and you don't care about whether the back testing looks realistic and everything like that to real trading, then you can just pull the chart back like I've shown you guys multiple times in the past and press the F12 key. And it's good. Every trade is different. Yeah. Up to you. I highly recommend spending, it's less than $100 for Simple Forex Tester. Yeah. I highly recommend spending it, It's worth the money, right? It's an investment in your knowledge. Or even Simple Forex Tester 2. Forex Tester 2. Unbelievable. Brilliant. Costs more, yeah, guys. It does cost more, right? Costs just under $200, that one. And that's why I recommend the cheaper one. But even though it costs just under $200, Forex Tester 2, it does allow you to get more data. Yeah, which means more testing, which means more experience, and means more value. And you can actually see, like, you can take an account in Forex Tester 2, like a couple of $1,000 account, and you can take it up to 10, 15, 20,000. And instead of just seeing it on paper, you're writing down, pressing the F12 key and all that, you're actually seeing it on an account, which would have been, if it was a live account. These programs don't lie. It's as real as you can get without putting down real money. Right? So I recommend doing back testing, guys. And that's what this video is about. Right? Okay, so thanks for watching, guys. All right. And if you've got any questions on this video, which I'm sure some of you guys do, feel free to leave them below. I appreciate all the comments. I appreciate all the likes I've been getting as well, guys, like Facebook likes, YouTube likes, wherever you're watching this video. I just appreciate the support. I do appreciate you guys, and you guys are part of the reason that I keep doing this. On a side note, Forex Reviews has done really well this year. The traffic base has really improved, and I owe it to you guys and your word of mouth. Telling people about the site and the referral. I'm not getting much traffic from the search engines, but I'm getting a lot of traffic from word of mouth, and it's just been great. And I just want to say thank you guys for the support. Thank you guys for watching my videos, and yeah, and in part 6, we'll go over some more stuff. So just stay tuned, and you'll receive that soon. And yeah, thanks for watching, guys, and happy trading. Okay, bye for now.